The Federal Reserve has officially set the stage for the next major market rally, and everything begins next week. On Wednesday, December 10th, the Fed will hold its meeting and decide whether or not to cut interest rates. According to the CME FedWatch tool, there is currently an 89% probability that they will lower rates at that meeting. Personally, I believe they will cut by 0.25%, bringing the federal funds rate down from the current 4.0% to around 3.75%. Back in September, the Fed released their projections for the year, and in that report they expected to end the year at 3.75%. The chart shows 3.6%, but that's only because the federal funds rate is expressed as a range between 3.5 new and 3.75%, so 0.25% cut next week would simply match their earlier guidance. And just so you know, right now the Fed is in an information blackout period, which means no member of the Federal Reserve is allowed to speak with the media until the decision is officially released. Over the past month, rate cut probabilities were swinging dramatically. Every time a Fed official made a comment, every interview shifted expectations. But now that they're not allowed to speak publicly, I don't expect those odds to move much before the meeting. Why does this matter? Because the Federal Reserve almost always aligns its decision with market expectations. They avoid surprising the markets even though, technically, that shouldn't be their priority. With an 89% expectation of a cut, going against that would shock the markets. If they decide not to cut rates next week, stocks, Bitcoin, gold and silver would all drop sharply in a single day. Even though it's just a 0.25% move, the market reacts based on expectations, not the size of the cut. Now let's look at the bigger picture. During the Fed's October meeting, they didn't provide any updated economic projections, because not every Fed meeting includes new forecasts. But next week's meeting will include updated projections for 2026, which makes this one extremely important. Their next meeting after that is scheduled for January 28th, and as of now, market expectations show only a 27.6% chance of another rate cut in January. After we see the updated projections and hear Powell's press conference, the market will adjust these probabilities again. So here's what you need to know. If markets move sharply on December 10th, it won't be because of the rate cut itself. The cut is already expected. It will be because of changes in expectations for future rate cuts. Now let's talk about something just as important: quantitative tightening. The Federal Reserve officially ended QT on December 1st. QT is the opposite of money printing. Ending QT raises the obvious question: when does the Fed restart quantitative easing QE? This matters because once the Fed turns the money printers back on, every major asset class, stocks, crypto, gold, silver, real estate, gets a powerful boost. The reason QT ended is because of liquidity issues in the financial system. The Fed had to inject $13.5 billion into the U.S. banking sector to ease liquidity stress, the second largest liquidity injection since the pandemic. This rising stress was one of the main reasons they ended QT, as discussed during their last press conference. And here's the truth. When liquidity conditions get worse, and they will, the Fed will restart QE. That's always been their emergency tool. Most analysts now expect QE to begin sometime in 2026. The exact timing depends heavily on who becomes the next chair of the Federal Reserve. Jerome Powell's term ends in May 2026, and President Trump will be appointing the next Fed chair. Unsurprisingly, he wants someone who supports easing monetary policy. Right now, betting markets show Kevin Hassett as the leading candidate with about a 74% chance of being selected. Hassett is a longtime Trump advisor and former director of the Council of Economic Advisors. He has openly expressed interest in the role and believes he is the best pick. However, it's not guaranteed. Some people inside the Fed worry he might be too closely aligned with the Trump administration and could challenge the idea of Fed independence. There's also debate about whether Hassett would have enough influence over the other voting members. Treasury Secretary Scott Bessent recently said the nominee would be announced before Christmas, although President Trump later suggested it will probably be revealed in early 2026. Regardless of who gets the job, whether it's Hassett or another leading candidate, all of them are more dovish than Powell. That means looser monetary policy, which is bullish for investors but of course not great for inflation. Now, based on everything we know, here are my predictions. Yes, next week, December 10th, I believe the Fed will cut interest rates by 0.25%. That should be seen as good news for stocks, crypto, and precious metals. As for quantitative easing, we'll look for clues in Powell's press conference, but my personal forecast remains that QE will begin sometime in 2026. And when it comes to the next Fed chair, regardless of who ends up being selected, all the top candidates favor easier monetary policy compared to Powell. So overall, this shift is likely to be supportive for asset prices, even though it raises concerns about inflation. That's the full overview. Thank you for watching, please subscribe, and have a great day.